is Algo Factory Tech. I'm here, the Cowboy is here. We're going to get into it. Listen, if you've been sitting on the sidelines, you've been wondering whether or not you should be involved in this. Listen, don't sit there and just wait. Be involved. Let Algo Factory show you how it can radically transform your bottom line with your income. With that being said, Cowboy, let's get into it.
All right, yeah, there it is on the screen. You see the QR code, and on that QR code is the website. So if you can either zap that code or just go straight to the website itself, and yeah, come check us out. We have that deal right now. That $49.99 is what do you call it? It's introductory. That's the word I'm looking for. Sorry, it's Monday morning. It's early. Give me a break here. It's an introductory rate. So basically, we're pretty new. And our membership is growing though, and as it grows, it's harder and harder to keep the lights on at the current rate. So we're going to have to raise that rate. I don't know exactly how soon we're going to do it. It might go, we might double or triple it, whatever that might be. However, if you do get in at the $49.99 level at that price, we're going to grandfather you in for as long as you keep your subscription alive. So that's one thing to understand. Is that we're going to hook you up like that. Well, if you get with us early, trust us with your time, trust us with your money, and we will guarantee that you're going to learn something for sure. As a matter of fact, just a quick reminder of what we do. We help people build themselves up as traders, and we help traders build trading algorithms. So people hear that term algorithm, and just the usual spiel here, everybody. An algorithm is not something to be scared of. It's not some fancy thing. Anybody who is a successful trader, I can almost all but guarantee they're using an algorithm whether they know it or not, because you use algorithms every day already. Tying your shoes is an algorithm. If you use Velcro, it's still an algorithm. You got Velcro shoes, still an algo. Sorry, kids, that's the way it is. Going to the grocery store, any kind of driving anywhere, you got to go left here, you got to go right there. If there's traffic here, you divert, whatever that is. That's all algos. So trading, even the old school basic kind of trading, is an algo, and we help you to build them no matter how simple or no matter how complex. We can help you get there. So, and if you've never traded before, that's okay. We help start you as a beginning trader as well. So basically, if you need the very, very basics, we have an entire course online that helps you get the basics, and it'll point you in the right direction. And of course, we have a 24/7 Telegram. So we're in there. I'm in there all weird hours because I work all the time. You'll see me in there sometimes at 2 a.m. my time here in the States, and of course during the trading hours, we're right here doing this every day, Monday to Friday. We have this free public version, 8:30 a.m. EST through 9 EST. So basically right up until the market open. So you're welcome to come here on YouTube. You can ask questions, that kind of thing. And we provide that for not only for our own people over at Algo Factory, our own customers, but also people who are just kind of jumping in. And on the website here, you see at the very bottom, this is our courses. We have the Essentials course, the Algorithmic Structure course, Operations course, and Ethos. So obviously, Essentials is going to be for the beginners. Obviously, Algorithmic Structure is where you learn how to build the algos. And then you have the Operations course, which the Operations is where you learn to treat trading like a business. And these last two courses you would think are the least important, but actually I think they are the most important. Operations is a course that will teach you how not to lose all of your money. So basically, and that's one thing that traders it's an underrated thing. Traders need to know how to treat their trading like a business so that they don't make the wrong move and, possibly lose all their money. And that can happen. And as a matter of fact, 90% of traders lose 90% of their money in the first 90 days in the Forex market. And I wouldn't be surprised to hear that is the case with other markets as well, especially such as crypto, or if anybody's playing like small cap stocks or anything like that. So yeah, if you want to be part of that 90%, then you can go ahead and watch a few YouTube videos and use all the same tools that other 90% uses and have the same results. We are here to help you break away from the pack, as it were. The Ethos course is the trading psychology, and this is actually perhaps the most important course. I know that most people leave that For the end, they're like, oh, I just build my algo and that's all I need, and I could just use my algo. Well, here's the thing about it. If you have a trading method and it's a great method, and you don't have your trading psychology down, you're going to lose your money most likely. Statistics say that you're going to lose money. Most people don't get trading psychology from the top down, they get it from the bottom up, meaning that they just go through a few years worth of trading and then they end up getting hurt enough times to understand that those who make it, those who don't just quit, which is the vast majority of people, they learn it, trading psychology, because they've had the fortitude to stick with it. And they learn, just like a rat in a maze, how to do it the right way. But you can arm yourself and inoculate yourself against the pitfalls of psychology that knock most traders out of the game. And believe me, I would guess, and I have no idea, but I would guess 95 or more % of people who start trading do not continue. That's just 99 is even realistic, 99%. So trading psychology will inoculate you against the pitfalls that can happen. It really is a psychological game. We're humans in the end, even with algorithms. You have to know when the algo turns on, when it turns off. You have to, not be too greedy, because an algorithm is merely, you are the one who builds it. You're the one who sets the parameters. My own personal algo that I am building, and it's actually pretty much built. I'm just having it refined, and I'm talking about the kind that's coded that I can just kind of turn on and off and trade for me. That has parameters that I set and reset. For every single asset that I trade, there are some differences in the way that my algo will do things, because I'm able to test against each different asset, which they all behave differently. And if I get greedy and I set that the wrong way, then I could lose my money easily. So trading psychology, don't leave it behind. Algo Factory, www.algofactory.tech. That's the commercial. It's a Monday morning commercial, right? Just gotta go ahead and throw all that stuff out there. And what you're looking at on the screen is a trade plan that I put together. I'm going to zoom the screen in here so people can kind of read a few things a little more easily. And basically on Friday, we had this news event. I don't know, it was unemployment numbers and something else. And basically the numbers popped up pretty hard. And this is the EUR-USD. This is a Forex chart, foreign exchange. This is the euro, like as in the currency, versus the US dollar. And the euro popped up on news, and there's always economic data coming out. As a matter of fact, I'm going to show you where I get that data. And usually on Monday morning, what we kind of do is we go over what's happening for the week, so we can kind of understand, well, and just to make this very simple, when not to trade. That's the way I treat news mostly. A lot of people want to go ahead and take news and gamble with it. And so they think, okay, I know that this news is going to come out and there's going to be a big move in the price and I'm going to catch that move. Okay. Do you know the people who are putting the news out? Do you know the people who are putting out the data? Like, are you in with the in crowd? Because if you're not in with the in crowd and you want to try and trade the news, you may run into problems. Because here's the thing about the news. These large, asset managers, banks, all these large groups with a lot of funds in Forex, what they're going to do is use the news to push price around and to push people out of their trades. I'm not saying that's what happens. I'm saying I bet literal money that that's what happens. That being the case, let me see. I just got a message from Moron. Yeah, Moron, no problem. I'll take care of you. I'll send you a link. Okay. All right. Anyway, so back to what I was saying is, so if you're going to trade on the days of major sort of announcements, these people, they know what the announcement is going to be ahead of time. I can almost guarantee you. And even if they don't, they know where your stop losses are. So as soon as the data comes out, they have an idea of what you might do. It's like the data is saying that, okay, the dollar is going to get strong. So, then the euro and everything is going to go down. So everyone's going to want to go short. So what we're going to do is, we're going to push it that way. We're going to push it that way and knock everybody out of their trades. They make a whole slew of money. And then once that's all finished, then people can go ahead and, lick their wounds and come back and trade another day. In the meantime, they just made a bunch of money off of you. That's usually how it goes, from what I'm seeing. So, and again, this is all opinion. It's a very well-informed opinion. So, nothing we say is investment advice. So you got to talk to your licensed investment advisor before risking your money in the markets, because you can lose money. But in the meantime, our opinion and educational purposes only, information says that that's probably what's going on. So I wait for the news and all that stuff to already happen, right? I'll wait for that information to come out. I'll wait for the market to kind of digest that news. The crazy wicks and candles to go, do what they're going to do, go haywire. And then I go ahead and look for some entries. It looks like perhaps it looks like it's a blackout week, a Fed blackout week. I don't see any Fed speak this week. It's a nice kind of easy week to trade. It's August, so we are in the midst of the slowest month of the year. But we do have on Thursday, the CPI comes out. So that's where we're going to get a lot of volatility added to the market. So Thursday at 6:30 a.m. is the first USD-based real large event. There is the 10-year bond auction, and that's at 1 p.m., 1:01 p.m. apparently on Wednesday. And that is important, but most people aren't paying attention to that. But I can tell you CPI is the hot ticket. And CPI is news that digests relatively quickly. This is the consumer price index. This is the inflation rate. So that said, that will be like the news drops and the price kind of moves around and then takes a direction, right? By the way, I just posted on the YouTube chat the web link to Forex Factory. Now, this data that I'm getting for when these events are happening, all that stuff, that's on forexfactory.com. They don't pay me anything. This isn't like a commercial. I'm just telling you where I get the info. Also, if you're using TradingView, all that same data is on there, and it's actually really well integrated into your chart. So you can go ahead and find that on TradingView as well, which is tradingview.com. I'll just type it in here. TradingView. And this is tradingview.com is where I build my algos, and it is it's the primary charting software that I'm using at Algo Factory, and there is a free version if you want to get started. You don't have to pay for that, but then of course once you start building algorithms, you might find that having the very inexpensive paid version is the way to go. And this is web-based, very simple. Doesn't require a very fancy computer to run it. So back to the news. On Thursday morning, there will probably be about an hour before market opens some volatility that is being added to the market, and then an hour after that, the market opens, more volatility. So Thursday would be an exciting day to trade. Friday, there's also PPI, which is the producer price index. So this is on the production end of CPI. And what I'm seeing, at least in recent months, and I haven't gone back to test this, and I really probably should, but PPI tends to follow CPI, meaning that, I don't mean to follow it on the calendar, it clearly does, but what I mean is it tends to go in the same direction as CPI. So if you think about it logically, CPI is the consumer price index. So this is a measure of inflation. This is bread and milk. Actually, I think is food excluded. Let me see here. We're going to see what the definition change in the price of goods and services purchased by customers. So I believe that includes food and everything else. So there is a core CPI that comes out the same day that excludes, let's see here, food and energy, right? So that's the core CPI. But either way, let's just say CPI is going to measure everything, the cost of rents, the cost of food, how much bread and milk cost month over month, right? So how much compared to last month. And then there's the year over year figure too. So they actually compare this year versus last year. And then the core CPI just takes food and fuel out. Are the numbers real? Are they fudged? Well, it doesn't really matter because the market's going to react to whatever the numbers say. Okay, so we're not going to get philosophical here and talk about, numbers are fake, and of course we all know that they're fudged, but that's not material to the conversation, right? What's material to the conversation is that the market is going to react to these numbers, and that is what matters. And the CPI tends to have a little staying power. So if the CPI reacts in whatever direction the larger trend is, then price will continue to go to that trend, usually, not always, but it would be very strange for anything different to happen. So we got a few more people in the chat on YouTube. We got Valley Girl saying, yeah, no worries, got your back. And we got Mavbet. Good morning. Yes, good morning, Mavbet. Good to have you on as well. And I think we got Brad King still in the room in the YouTube chat. And of course, over on the Telegram, we have the usual suspects all joining us. And there are some questions here One of the most recent questions I see on here was Ray asking Shiba question mark. I don't know, Ray, you're just following a cryptocurrency called Shiba, maybe Shiba Inu. So at any rate, we've talked about the news, talked about CPI, and then PPI is the on the producer side. So if you think about it, really, the producers are products are produced for us to consume. So production happens before consumption. So if there's an increase in production price, there would be an increase in consumption price. So unless this is a severely lagging metric, then the PPI should be in the same direction as the CPI. And we got Cool Cat in the chat as well. So PPI will also be pretty volatile. It has, at least in the past, and that's on Friday, an hour before market opens. So Thursday and Friday, the market should be kind of similar in an introduction of volatility and chances to make some money, at least on the day trading side of things. If I were in a swing trade before the CPI or PPI data were to come out, if I were to a swing trade before that, I might consider tightening up some stops. I would not day trade before these came out. I would be in and out of day trade prior to any of the CPI, PPI data, because that, the swings on that are pretty heavy. And even if you're ultimately, if your day trade was in the right direction, it might swing away from that just to knock you out of your trade. That can happen. In fact, it's pretty common. Oh, it looks like the Fed is not in a blackout. We got some talk at about 4:15 p.m. EST on Thursday. I don't know if Harker has voting rights or not, but anytime anybody at the Fed speaks, it can affect things. So that's just the week coming up. So let's take a look at some of the questions. I don't see any questions in the YouTube chat, and I see a lot of people in the YouTube chat are just people who are already our clients and asking questions in the Telegram. So I'm going to roll over there. I guess we're to look at the Shiba chart, although this is way back on Friday, I think. So that might be, or it might be, no, that looks like it was possibly yesterday. I don't know. We'll see. Whatever day that was. Let's see what else. Just hoping to go over the big three. Okay, so Robert wants to see Bitcoin, EUR, and JPY. Robert, I'm assuming that you're asking for EUR, USD, and USD JPY in that. So we can go over those charts. We have a little time. We'll go over Bitcoin because that seems to be, of course, what everybody wants to see. Remove some noise here. Okay. Give me just a moment, everybody. Apply that. Okay, we're just cleaning this chart up for you. Okay, well, Bitcoin has been ranging, so it's just slowly falling. Going back to last month, we had Bitcoin go up and kind of touch the highs, and it kept grabbing liquidity from around, say, 31,000 area. And then eventually it must have grabbed whatever liquidity it was going to grab because it headed down to the 28.8 area. We'll take a quick look at the liquidity, and this is over at the kingfisher.io. I think the wheel is broken right now. Not broken, but they have a spin wheel, and I know it was kind of, it was not working. I got a message on that. And spinning the wheel over at Kingfisher gives you free credits, and free credits will give you the ability to take a look at what is called liquidity. Okay, so liquidity is basically where price likes to go. Without getting too far into the technical explanation of liquidity, basically it's where people's trades are going to liquidate. That is where price likes to go, because market makers make money when people get liquidated. It also happens to tend to be where the stop losses are, or at least near there. And when that happens, market makers can make money. It helps them push price where they want it to go. I just put a referral code into the chat box. So if you are interested in using the Kingfisher, it's a really great tool. It can look at liquidity on all your major exchanges: Binance, Bitfinex, OKX, Bybit, BitMEX, BitGet, Multi being all these exchanges. And it looks at most of your large cryptos that are traded on the derivatives exchanges. I mean, TRX, LTC, EOS, Monero, Dash. These are all some old coins, but they're all also very, very much traded. And they have new coins on there as well. So, but most people are trading these derivatives and they just continue to do so. You got Maker, SNX, DeFi. DeFi, I think, is actually I want to say that is sort of an index of coins, but either way, it's all in there. It's a great tool. And we're going to look at the Bitcoin leverage right now to see where price may go. The closest block of leverage right now is between 29,300 and say 30,000. So 29.3 to 30,000 is where it is right now. So 29.3. So between these two blue lines is where price right now may want to go. So to look at it algorithmically, I have to zoom out a bit here. Give me just a moment to go through these multi-panel screens. Yeah, price could go there. It's hard to say once it goes there which way it's going to go, and it could do things before it goes there. So it doesn't mean price is going to go straight up to this area to start. Hold on, I gotta fix my mouse. To grab liquidity. It doesn't mean it's going to just bounce right up there, although it very well could. You should see every so often there's a large move, which is grabbing liquidity, right? So in these very slow times, what Bitcoin basically does, you see how it's kind of ranging like this. It just has these moves where price really isn't doing much, and then it just makes this huge move, right? Well, a way to explain this is that these small moves where price ranges back and forth, that's just retail. That's Yumi, Joe Sixpack, Jane Winebox, just, trading. We don't have a lot of money. We're not multi-billionaires. So we don't push price in large directions. But what happens here is as price starts to go up, those same kind of people, us, especially the ones who are not educated, what they will do is they'll start going long, and their stop losses start to build right here. And then when the stop losses build, the large players will push price into those stop losses because that's that liquidity that we were talking about before. So price will actually head down to grab that liquidity, and then it'll continue to range for a while, right? And then because this liquidity is now all eaten up, maybe those lower ones actually still exist, but the local liquidity is eaten up. Let's get rid of that. And so these are now gone, right? But more of those build up, and then they push price down to get that, and then even that one gets taken out, and then more liquidity builds up, and then they push price way down, because all the while the price was ranging, liquidity was kind of building up all down here, and liquidity is building up here too, because people were going short. But eventually what happens is they will push price into these larger liquidities that have built up while price was ranging, because price makes a move and it's going to go up, everybody go long, and then price makes a move down, it's going to go short, everybody go down. So people are tempted into trades to kind of take advantage of a larger move. But what these market makers will do is they'll take these large moves to take those trades out, and then they'll just continue ranging for a while, because at this point in the market things are rather slow. There's not a lot going on. So to understand that, to know where the larger move is going to go, that's the buildup of liquidity over on Kingfisher, is what we use as a tool, right? And then in the meantime, if you're going to play in choppy waters, you got to know how to play in choppy waters. You're going to have to develop an algorithm that knows how to trade choppy waters. And on the private group, I've actually developed an algorithm before people's very eyes on how to trade choppy waters. So it's very doable. You have to be pretty much a day trader to catch a lot of these little tiny moves. So that's one thing to understand about it, because right now you're looking at a 2-hour chart. So if you were to say down to like a 15-minute chart, this begins to look rather tradable. So that right there is tradable if you have a good algorithm, but it's tricky, right? You think price is going to go up and then it goes down, right? And then you have these periods where there's just nothing to trade, and that's probably over the weekend, or it is over the weekend. So the weekend is just not a really good time to trade at all, especially in August, and especially during the Bitcoin sort of winter that we're in. Even though price is not as low as it has been, even though the bottom may well be in, we do talk about what may happen with Bitcoin in the future, and to look at the chart, just to make that a real quick look. And I know V and we've separately come up with our theses on this, and that our theses tend to agree, even though separately, formed. But there's a decent chance that, and this may be kind of event catalyzed, but the low on Bitcoin this last year, like right at the end of last year, was say about 15,000. And if there may be an event to take price all the way down, and that we've done, gosh, I think it was 3 weeks ago, we even did an Elliott wave look at what might happen with Bitcoin and why. And basically, I think the low 20s is the highest we think it'll dip to, meaning that it could go lower. Now, we don't know when it's going to happen. It could pull one of these, except over a longer period of time. It might take months to happen. But at some point, I think, maybe we'll see a dip down and, maybe just scare people, and then it'll come back up to get, people will get all excited, and then it'll head down possibly again and go down into that low 20 range and possibly dip even lower to scare people. So, this is basically what I'm looking at. And this timeline is even realistic, what I just pointed out. The possibility that things should happen this quickly, it's quite possible. Maybe a dip later this year, say end of Q3, beginning of Q4, something like that. So, but it's, again, this is all forecast. None of it is, set in stone. We don't know the future, even though sometimes it looks like we do. But at any rate, I think that's a decent map out of Bitcoin and what can happen. Right now, it's just extremely choppy. So, if you're going to trade the chop, you're going to have to be a day trader and know how to trade the chop, and that is going to happen on, like, say, the 15-minute time frame or lower, if you have the kind of exchange with that kind of liquidity. So we'll go ahead and look at those other charts, Robert, for you. But for the meantime, we are at the end of the free for the public look at Algo Factory. So our beginner live lab is pretty much over. So V, can you give us that send off, and then we'll head over?
Absolutely. Listen, folks, here's the deal. Thank you so much for listening to us on the free end of these things. But look, join us, give us 6 months of your time, and I promise you, you will have a skill set that will be unmatched. You'll have a skill set that will bring money into your bank account month after month, week after week, day after day, and AlgoFactory.tech is the place where you can do that. Join us. Now, with that being said, Cowboy, let's get to the other side.